When I look at the world in 2025, I see a familiar pattern, my young friend. People are excited again. They speak of crypto, AI stocks, NFTs, metaverse fortunes, the same way my generation once spoke of radio companies and automobiles in the roaring 1920s. And every time I hear this excitement, I smile. Not out of cynicism, but because I have seen this movie before. You see, I once lived through the great crash of 1929. Back then, I watched friends lose their homes, brilliant businessmen go bankrupt overnight, and dreams vanish like smoke because they believed prices could only go up. Today, I see that same sparkle in people's eyes, the same hunger for instant wealth, and I feel the same need to whisper a quiet truth. Price is what you pay. Value is what you get. You can buy a crypto token, a share in a dazzling AI company, or even a picture of a digital ape, and yes, they might make you rich for a moment. But what you buy and what you own are not always the same thing. In my book, The Intelligent Investor, I spoke about someone I called Mr. Market, an emotional fellow who knocks on your door every day, offering to buy your stocks or sell you his. Some days he's euphoric, some days he's terrified. If you let his mood control you, you will follow him into ruin. But if you remember his madness is your opportunity, you will use him instead of obeying him. Crypto investors today, they have their own Mr. Market. His name is Twitter. His voice is louder. His moods swing faster, but his essence hasn't changed.
I'm not against technology, my friend. In my youth, people once mocked airplanes, then marveled when they flew. Innovation is the heartbeat of progress, but even innovation must pass one simple test. Does it create real value? When I look at an AI company, I ask, does it earn money? Does it have a durable advantage? Is there cash flow or just hope flow? I remember, in the 1930s, a company I studied looked perfect on paper. Its prospects were praised by everyone. I, too, was tempted. But when I examined its balance sheet, I found more dreams than dollars. And dreams are expensive when bought at market price. That's why I always insisted on a margin of safety. Imagine building a bridge that can hold 30 tons, but you only expect 10 tons of traffic. That extra 20 tons, that's your safety margin. Investing works the same way. When you buy a stock or even a new form of digital asset, you must ensure that even if your expectations are wrong, you won't lose everything. If your investment depends on everything going right, you are not investing, you are gambling politely. I once bought bonds during the Depression when everyone else was running away. They were selling at 30 cents on the dollar. The world said I was crazy. But I wasn't betting on optimism. I was relying on arithmetic. Numbers don't panic. Numbers don't dream. Numbers simply tell you whether the price makes sense. When those bonds recovered to their true value, I didn't feel brilliant. I just felt prepared. That's what the margin of safety does. It turns panic into patience.
Many young investors today believe that markets move at the speed of tick-tock. But remember, my dear listener, in the short run, the market is a voting machine. In the long run, it is a weighing machine. Right now, people are voting for AI. They are voting for Bitcoin.
They are voting for hype. But one day the weighing machine will arrive, and it will quietly ask, "Show me your earnings. Show me your worth." Some will pass the test, most will not. Do not misunderstand me. I do not wish to extinguish your curiosity, nor your enthusiasm. If I were your teacher today, I would not forbid you from exploring crypto or AI stocks. I would only ask you to think like an owner, not a speculator. When you buy a share, buy it as if you were buying the entire company. Ask, would I be proud to own this business in real life? Would I trust it with my family's savings? Would I sleep well at night knowing I own it? If the answer is no, then the price doesn't matter. My son once asked me, "Father, what is the hardest part of investing?" And I told him, "It's not learning about finance, it's mastering yourself." Your greatest enemy in the market is not volatility, not inflation, not the Fed. It is your own emotions. Greed, fear, envy, they are timeless currencies of destruction. The intelligent investor doesn't try to eliminate emotion, but to discipline it, to feel fear and still think, to feel greed and still wait. I am old now, at least I would be, if time allowed me to return. But if I could leave you one thought before I fade again, it would be this: investing is not about being fast, it is about being steadfast. Markets will rise and fall, new technologies will shine and fade, but principles endure. Seek value, demand a margin of safety, be rational when others are reckless, and remember, the surest way to become wealthy is to first learn not to be foolish. So, my young friend, if Mr. Market knocks at your door tomorrow, don't rush to answer. Smile and wait until he offers you value, not excitement.